Hi, this video is about the accounting cycle. So I like to use the 10-step accounting cycle. There are variations, 8 steps, 9 steps, but I like the 10-step and I teach my students the 10-step because I believe it is more detailed and it's clear and it follows along with the curriculum better. So I always teach my students the 10-step accounting cycle. And the main difference is breaking out the source documents section and separating um, closing and adjusting entries. So let's go through it. So there are 10 steps to the accounting cycle, and I write them in these three groupings to help my students see the full process of the cycle and the purpose of it. So step one is collecting source documents. So for step one, students should be able to identify the 5 source documents that we learned, know how to read them, know when they're used. Then step two is analyzing transactions. And at this point is where they use the analyzing chart. And I stress to them, if you use the analyzing chart for every single transaction, the analyzing chart answers just about every question that they will come across related to a transaction, the impact on the accounting cycle, the impact on the accounting equation, how to complete a journal entry, um, various things. So usually if they just complete the accounting analyzing chart, it helps them answer a lot of questions. Step three is recording the journal entry or recording the transaction. So this is where they use the general journal. So I usually have them say, what form do we use here? The general journal. What is that? GJ. We review all of that. And then we have the last step in the first part, which is posting. So steps 1 through 4 take place all month long, over and over again. Every day, money's coming into the company, money's leaving the company, coming and going and coming and going. All month long, we are doing steps 1 through 4 over and over and over and over. So then the end of the month comes. So now at the end of the month, we go to step number 5. So step number 5 is create a trial balance or prepare a trial balance. So that's the first step for the end of the month. So after 4 is 5, create a trial balance. Then once the trial balance is created and they know what the trial balance is, the debits and credits must always be equal. All of the accounts from the chart of accounts must be in the trial balance along with the balances for each account. Then we're ready to create a worksheet. When the trial balance is in balance, we're ready to create a worksheet. Once we've created a worksheet, and I teach my students that a worksheet is a rough draft for the financial statements. We do all our thinking and work out all the problems in the worksheet. Once this is correct, we take the information from the worksheet and we prepare the financial statements, the reports that management will read in order to make decisions about the company. So steps 5, 6, and 7 happen at the end of the month. And then once that's done, we go over to 8, 9, and 10, which I call them preparing for next month. Because once we've created the worksheet and we prepare the financial statements, that part is done. People are looking at those reports and making decisions. But we must make our general ledger match what information we put on the financial statements, and they don't because of adjustments. So now we go down to step number 8, which is we record the adjusting entries that we created on the worksheet into the general journal form and we post them to the ledger. Then we need to close our accounts, which is a part of preparing for the next month. We must set all of our temporary accounts to 0. So we record those entries on the general journal form and then we post them to the ledger. And then the very last step in preparing for next month is we do a post-closing trial balance to make sure our general ledger is ready to go for the next month. The thing I stress about the post-closing trial balance is that it is the same thing as a trial balance here, except for one major difference, and that's in the post-closing trial balance, it only has accounts with balances, meaning none of the temporary accounts are in the post closing trial balance because we closed all of those. So the post closing trial balance will only have accounts that have a balance. So we use a 10-step accounting cycle. Steps 1, 2, 3, and 4 happen all month long. Then we go to 5, 6, 7 for preparing for the month. And then 8, 9, and 10 mean closing the end of the month. And then 8, 9, and 10 is preparing for the next month. So this is the accounting cycle, and this is how I teach it to my students. And I draw a chart like this on the board to help them see the process and that everything flows together. Okay, thank you.